It was a wild trading session on Wall Street as traders woke up on the wrong side of the bed. The S&P 500 finished lower by 0.87%, but it was much lower early in the morning. The NASDAQ is an even more stark example of that. The NASDAQ composite was down over 2% as we started trading here today, and it nearly closed in the green. We were just below that break-even line there. So crazy activity all over the place, a lot of it fueled by inflation concerns. But it was nice to see the bulls kind of rebound off of the lows of the session. So we'll take a look at that, see what it means for our posture. Then we'll get into a trade application example. We wanted to focus on a large, well-known financial sector stock because it's setting up with a bullish intermediate confirmation signal. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 11th, 2021. First of all, if you're new, welcome aboard. Great to have you here. Remember to go over to YouTube, click subscribe on our channel, then go down to our description area and sign up for our email distribution list so that way you can be notified whenever these videos get posted, and you also will see which stocks are giving you overbought and oversold cluster signals. Of course, quite a few oversold cluster signals, I'd imagine, these days within the S&P 500 and other indices. We are also heavy users of Twitter. My handle is @BrandonVanZ. I'd encourage you to follow me if you're not doing so yet. And we do appreciate those of you that help support this project by clicking like and retweet on these Market Outlook related posts. And then last but not least, we also have a presence on Facebook. Feel free to join us at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. So normally if the market's down over 1%, I would show you that alternative chart, and I figured for most of the day I would be showing you just that. But as it turns out, S&P 500 did not close down by 1% today, just shy of it at minus 0.87%. And you can kind of see what that looks like here. We do still remain above a rising 30-day moving average. Some of you saw me joking about that on Twitter today. While it felt like there was panic in the air, we have to remind ourselves we are still 2 days removed from an all-time high and trading above a rising moving average. And you can see right here that early in the morning it did cut below that moving average, but the nice thing is, and we closed above it. Remember, it's the close that is more important than where we traded throughout the day. So good to see that. It's also good to see that despite today's turbulence, we did not lose our bullish posture according to the market forecast intermediate line. So that's that green line down below. Notice that the green line is still in the upper reversal zone, and therefore we continue to retain that strongly bullish posture. The green line is falling, as you can see in the label, but as long as it remains above 80, we would still consider this to be a bullish market environment that we're in right now. But like I mentioned to my dividend growth investing class today, just because we have a strongly trending market right now does not necessarily mean that we've got an extended bull market in front of us. Remember, valuations are quite high, probably the second richest in history, or at least in modern history, just after the dot-com bubble era. So we certainly have a lot to contend with there from a valuation perspective. But the good news is, there's enough momentum in certain parts of the market, particularly things like, materials and energy and financials that are kind of carrying the day for the market, while some of the more growth-oriented areas like technology and discretionary starting to peel back just a little bit there. The Dow Jones was down more than 1% today. So remember, the Dow Jones had been this market's leader, and it probably still could be considered that much. You can see that the intermediate line on the Dow Jones, as an example, is at 88, which is higher than all the other three that you see on the board. But it did suffer the biggest blowback here today as well, down 1.36%. Now, in doing so, it actually set up a bullish intermediate confirmation signal. A reminder of what that signal is using that market forecast technical indicator that you can find over on the Thinkorswim platform. Now remember, these charts, the way that they're set up with the color backgrounds and the color moving averages and all of that, that's computer programming code that we work up here for our premium members at Market Scholars. But the general and generic market forecast technical indicator can be found even for those of you that are not Market Scholars over on the Thinkorswim platform. Anyway, what we're looking for with a bullish intermediate confirmation signal is the green line in a bullish position, and remember the green line can be bullish in two different ways. It can either simply be in the upper reversal zone above 80, as it is right now, or it can also be rising between 20 and 80. So like an example of that would be back here in early March when that green line reversed course. It was going lower, then it reversed course and went higher. So during that time when it was going higher, we would also consider that to be bullish, which is why starting at those points, you can see the background colors of the chart started turning to green instead of pink. So we've established that right now, according to that green line, we do have a strongly bullish posture as the green line is still in the upper reversal zone. Step number 2 is then looking to see if the red line is in the lower reversal zone. Remember, on the market forecast technical indicator, the lower reversal zone is at 20. And this one would be really hard to see with the naked eye, which again is one of the benefits of our computer programming code here, where we've added these labels to the chart. In the red label here that says momentum, you can see that the reading is at 19.08 and falling. So in other words, just a hair below 20. So this would qualify as a bullish intermediate confirmation signal. Now, those of you that have been watching these videos that David and I have put together for you over the last 5 or 6 years, both with Market Scholars and then also when we were working for TD Ameritrade, you'll know that we talk about the bullish intermediate confirmation signal quite a bit. And one way to kind of separate the wheat from the chaff, so to speak, and determine which setups are better than others is to use the blue near-term line in our assessment. Now, technically, that's not part of the actual signal, but it can help us kind of filter out the better examples versus the worst examples. And so what we're looking for with that blue line is for it to be between 20 and 50. What that kind of highlights is this idea that the markets are giving us a decent enough exhale for us to be attracted to the mindset of the bullish intermediate confirmation signal, which, remember, the mindset is a buy the dips mentality. The bullish intermediate confirmation signal is effectively saying that, hey, we've got a bullish intermediate trend. Obviously, that is the case with the Dow Jones Industrial Average. That's a strong looking trend there. The red line is telling us that we have a momentary drop-off, a fallback in price, in other words, buy the dips within a longer uptrend. And then the blue line is telling us if we have a healthy enough exhale from the market. Sometimes the blue line just drops a little bit below 80 as an example, but not below 50. In that case, we might have a little bit of a pullback, but it's not really one that we get too excited about. Once that blue line comes down a little bit more like it did here today, then we can say, okay, yeah, there is a decent enough of a pullback here within a broader uptrend where maybe this is a time to kind of reload the bullets back into the gun again. You can see here where we ended on the Dow Jones was at about 34,269. Just yesterday at the highs, we were above 35,000. So that's a pretty healthy, 700 point give back in just a couple days. And therefore, those folks that were a little bit cautious around the market going up for 5 days in a row right here now have a better chance to maybe buy in at a slightly better price than they would have yesterday or the day before. So that's a pretty good example there of a bullish intermediate confirmation signal. Obviously, it doesn't guarantee anything, but for those of you that are trying to practice implementing that signal, this one will show you a pretty good example of that. Remember, one other thing that we do look for is we'd like to see that the red line is not lower than 5. It's those times where it gets a little bit more concerning that there might be an actual trend reversal. So that's another thing that makes this maybe one of the more ideal setups here, where the red line didn't get aggressively low here today. It just got a little bit below 20. In terms of the bottom charts here, you can see that we continue to have bearish postures on both the NASDAQ composite and the Russell 2000. The NASDAQ has been in a bearish posture for the last week. And so, maybe a little bit more concerning there, some, more wear and tear on those markets. I was hoping that we would get a little bit of stabilization on this candle back here, which was giving us kind of that hammer formation at that previous support. But, the market had other things in mind. You did get a nice bounce immediately following that hammer candle, but unfortunately, it just didn't have enough oomph to keep pushing through that moving average. It basically sat right on the moving average and then used it as an excuse to push even lower. So we still got a lot of work to do there before the NASDAQ looks a little bit better. Now, on the positive side of the coin, I'll reiterate what I mentioned in the intro, which is it was a rather impressive day for the NASDAQ. It was down over 2% at the beginning of the day. Look at how strange that particular candle looks here. It's probably the only one that looks like that on the entire board here, going back over the last 3 months. Basically what this is showing us, notice that it's empty in the middle, so it's not filled in like yesterday's candle, and it is, most of the range of today is filled in by the body and not the wicks on the top or the bottom. And when you have a situation like this where the outline of the candle is in red like it is here, as opposed to something like this candle over here where the outline was that darker green or black color, what that signifies is we gapped down to start the day. We pushed all the way up to near the highs of the session, but we still ended up closing a little bit lower. So that's why it's still outlined in red, because we did close 0.09% lower. Had we pushed up just a little bit more at the end of the day, that could have changed the color of the candle itself. Either way, having that nice open candle like that is a very positive sign. It doesn't necessarily mean that this skirmish that we've had here recently is going to end, but what it does tell us is there is interest from buyers out there in purchasing some of that beaten up merchandise. And one thing I will say about today's market is, while we didn't end up having very strong breadth, the stocks that did go up were some of the ones that got trashed the most in the last couple of weeks and months. In other words, I noticed a lot of last year's big winning themes, like your teledocs and your Zoom videos and DocuSigns, those types of companies that had really been beaten up here recently. They actually had really nice days today. They were up, 3-4% or whatever by the end of the day, despite them mostly being down in the morning. So, maybe that's a good sign that, some of those fallen angels are coming back to life a little bit there again. So we'll keep our eye on it, but obviously a wild, wild day for the NASDAQ. The Russell 2000 did finish lower today as well. It was down 0.26% today. You can see it did break some of those some of those prior support areas, which didn't break my heart. Many of you know that I put a bearish trade on the Russell 2000 ETF in this presentation a couple weeks back. And so while that trade didn't really start off on a good foot, because that index started rallying higher as soon as I put that trade on, that trade has now gone back into the profit zone. We are now profitable on that trade after we've now kind of rolled over here and kind of broken down below some of those prior support levels. So sometimes it just goes to show that you can be patient with the trade and it can still end up working out to your original thesis. Sometimes you'll get in and out quickly. By the way, some of you that would have taken that Dana Corp trade that I did on Thursday's video as a bullish swing trade know that we were able to successfully close that out at max gain just yesterday morning. So we were only in that trade for a couple of days. So sometimes you're getting in and out with your thesis in hand. Other times you got to kind of work for it and be patient for it, like we've had to a little bit more here on the Russell 2000 trade. But you can see that both the Russell 2000 and the NASDAQ have these yellow moving averages here. What that signifies is price is currently below rising moving averages. Now, just yesterday on the Russell 2000, that moving average was going a little bit lower because the moving average was red. Price was below the falling moving average. But just the way that moving averages work, remember a 30-day moving average, like is the case here, is basically just going to take the last 30 days worth of closes and then average them out. But it's kind of a rolling basis. So like the 31st day way back gets lopped off for the new day and so on and so forth. So just the way that things were shaking out here during that 30-day time period, it allowed the moving average in this case to go up a little bit today, despite the NASDAQ itself going down. But there's a pretty decent chance, I would say, that if the Russell stays below this moving average for, let's say, the rest of this week, it would be my expectation that that moving average will start to turn to a red color there as well. So just be a little bit more cautious with some of those more high octane areas, like your high growth NASDAQ stocks and like your smaller cap Russell 2000 stocks at this point in time. Let's go ahead and take a look at some of the market breadth figures. I mentioned it briefly before, but just to make sure we're putting a bow on that, what I've got here is the visualize area of the Market Watch tab, and I've pulled up the S&P 500 public watch list. And you can see here that today we did not have very bullish breadth, even though we had a nice comeback rally in some of those indices. You can see that the advancers were only at 86. In other words, 86 out of approximately 500 companies in the S&P 500 were finishing in the green today, and over 400 were finishing in the red. So despite having a nice rally off of the true lows of the morning session, we still have a lot of work to do with the market breadth. In fact, one of the things that you guys saw me post on Twitter on Friday is that I keep track of the new highs and the new lows on the Market Scholars 1000 list. And while we had the most new highs week over week, we also had the most new lows, at least in many months on the new lows. So we have a strangely diverging market that we're dealing with right now, where a lot of the big blue chip companies are going on to hit new highs. A lot of your big, dividend paying types of stocks, we're having a lot of success in my dividend growth investing class. As just one example, but the Nasdaq and the high growth and the disruptive types of companies out there are really struggling, and so some of those are starting to pop up on the 52-week lows list all of the sudden. So very interesting markets, to say the least, that we find ourselves in. One other thing I found of interest today is, let me pop on over here to the internet briefly. I wanted to show you this 9 at 9 graphic. Remember, I put this together every trading day at 9 a.m. Eastern time to show you which 9 stocks are up the most, which 9 stocks are down the most within the Russell 3000, to give you an idea going into the opening bell as to what kind of a day we might have. And a lot of times it kind of will show us what sort of a theme we can expect as trading opens up a half an hour later. Well, today was a very oddball day where that did not play out as planned at all. Case in point is right over here on the downside. So the way that you would look at this graphic, you can see I've got the little upside on the left and the downside on the right. And by the way, you can get this on our website. Up here on the blog area, hover over blog and then click on 9 at 9. Otherwise, many of you follow me on Twitter and see it there posted in the morning as well. But nonetheless, what I wanted to point out is the down area here. We woke up today, and this was the type of day where in the past, sometimes it was even hard to find 9 stocks that would be up on a day like today when you have such overwhelming selling happening in the pre-market early hours. I got somewhat fortunate today that we're still in earnings season, so you still have some earnings beaters and winners here that would show up in the positive side of the column. But the commentary here right now I wanted to focus on was on the downside. Notice that the worst performer in the Russell 3000 this morning at that time was Virgin Galactic, ticker symbol SPACE. They reported earnings this morning. They were down 18% at that time. And then you can see some of these other numbers as we're going lower and lower and lower, all the way down here to Iridium, which was down about 10%. So we basically had 9 stocks that were down double digits percentages before the stock market even opened. Well, as the day went on and we started to see these significant rallies take place, it occurred to me that some of these names that I had seen this morning that were doing so poorly, down double-digit percentages before the market opened, actually were finishing in the green. And so I had to test to make sure I wasn't losing my mind there. And indeed, you can see up here, I put them all into a watch list on Thinkorswim, kind of in the upper left here. I know that might be hard for some of you to see that's watching this on a phone, but I'll kind of read them off for you here. SPCE, so that's that Virgin Galactic, actually finished higher here today. Now, this is actually showing the mark, so it's showing what's happening after hours today. But just to kind of confirm that to you here, I will show you right here that SPACE closed higher by almost 1% today at $18.12, despite this morning being down nearly 20% pre-market at about $14. And they weren't alone. In fact, out of these 9 stocks that were down basically double digits pre-market, only two of them actually finished lower at the end of the day, and that was Novavax and Hanes Brands. Both of those had pretty ugly days. They finished maybe a little bit better than where they were trading pre-market, but they both finished down double-digit percentages. But you can see some of these other stellar moves that took place from Pacific Bio and Beam and Digital Turbine, Plug Power, SailPoint, and Iridium. You can see some of those returns over here. In the case of Plug Power, you had a stock that was down 11% pre-market that finished up by 19% in the normal market. So a complete reversal there, and many of these others were up 3 and 4% along the way. So very strange day there. You usually don't see that. When you have a beat down type of a morning where you have all these double-digit losers, they usually stay in the red. They might, advance a little bit throughout the day and maybe improve their positioning at the close compared to where they were at in the pre-market. But this is an extreme example where you had absolute beatdowns in the pre-market that led to enormous buying opportunities for some of those that were bludgeoned the most. Over here, while we're on the internet, I'd like to also take a peek at our sector selector tool. Remember, this gets put together on Friday evening, so it's a couple days old at this point, but can still give us a general sense as to what's happening from a sector rotation perspective. Once again, we see energy leading the way up at the top for the second straight week, and remember, energy was leading us here kind of at the end of February into March as well. We also see financials kind of holding the line at number 2, although that was extremely close between financials and materials. Materials nearly knocked financials off at the last second, but didn't quite get there. We'll see what this Friday brings. But speaking of materials, they have now advanced for 2 straight weeks, and they are at their highest level now in the past 3 months. If you were to kind of go backwards with this gold bar right here, you can see that the highest they had been previously was here in the final week of March. They were in the 4th place position. So now here they are at the 3rd place position. We are seeing some very robust gains out of stocks that are like the steel stocks, as an example. Nucor Steel, one that our dividend growth investing class bought last year, and we've seen more than a double during that time period out of. And Steel Dynamics and POSCO and U.S. Steel, you name it, you throw a dart at a steel stock. Had you been invested in the past month or 2, you're probably seeing some very substantial gains at this point. So a lot of those steel, chemical, those types of companies doing pretty well. Even some of the mining companies, right? The iron ore companies, the Vales of the world and Rio Tintos and things like that are, they're all out there performing pretty well. So, keep your eye on that area. They don't get a lot of press out there, but this is kind of their moment to shine. Remember speaking of shining, gold mining companies are in there as well. But remember, with inflation expectations picking up, a lot of times the materials do benefit in that type of an environment. Now, replacing in the number 3 slot, materials replaced consumer discretionary. And like materials have gone up for a couple of straight weeks, consumer discretionary has gone down for a couple of straight weeks. And one thing that I will point out about this graphic as well is I work up these numbers on an equal weighted basis, not on a market cap weighted basis. So some people might look at this drop in consumer discretionary and wonder, okay, well, is that Amazon and Tesla really struggling here because people know that they are one of the largest components within the market cap weighted consumer discretionary, but that's not the case here. Amazon and Tesla and Home Depot are equally as important as all the other smaller apparel retail companies and things like that. So for the longest time, those apparel retailers had been kind of holding up their end of the bargain, but we're starting to see slippage in that area here on a relative basis. Some of those charts still look pretty good. It's just that materials are flying so high so rapidly that on a relative basis, materials do appear to be stronger than discretionary right now. I would also point out that industrials replaced communication services. Communication services, of course, noteworthy for having a lot of the internet companies in there, like your Facebooks and other social media types of companies in there. So starting to see a little bit of a slide in some of those names. Industrials do tend to kind of work in unison with materials, both very cyclical areas, both that benefit from a falling dollar and different things like that. And we did see industrials make a nice little jut higher there. So, they might not be the most exciting places on the planet, energy, materials, and industrials, but there are getting to be some very interesting trends developing within those areas. And if you're stumped for ideas, of course, that's where my Monday top-down trend trading class can perhaps help you along. We own 32 stocks in that particular class portfolio that we bought over a long period of time, and only 2 of them are losing money at this point. So despite this not being an ideal world for momentum-based trading like we do in that particular class, we've held up really, really well with transitioning into a lot of the financials and materials companies here in recent months. Also, while we're over here, just quickly wanted to say thank you to those of you that help support this particular project by clicking like on Twitter whenever David and I are doing these videos. So 121 of you stepped up to the plate for me last time around. Anytime we're up and over 100, I've got no complaints there. So keep it up on your end. We really do appreciate that and helps us justify taking a couple of hours out of our day to do these free videos for you guys. So if you get value out of them, please continue to do that going forward. Remember, you can do the like on Twitter right here on our website in this little widget below the video that you're playing, or you can even just do it over on Twitter itself, where we typically have these pinned to the top of our Twitter feeds. And then tomorrow, I've got my factor-based swing trading class going on. I'll look forward to seeing hopefully many of you there. We did have a nice win last week. We were in Dell Technology for just a couple of days in and out, and we're able to lock in another max gain there. So let's try to find another winner tomorrow morning in that class. And then David will be teaching his options inventory class in the afternoon tomorrow. All right, let's get back on over to take a peek at some more charts over here on Thinkorswim. Let's start doing some 12 grid analysis here, starting with chart 5A. This is our asset class 12 grid. A reminder that the background colors will change from green to pink depending upon what the posture is according to the market forecast technical indicator. So let's go ahead and start down here in the lower left-hand corner today, and you can see that we've got another set of clusters showing up. We had 3 oversold clusters over here. We've got 3 oversold clusters right here. This was a pretty lousy reversion to the mean type of a move. Yeah, you did have 3 out of 4 up days there, but this thing didn't even have enough oomph to get to the moving average before rolling over yet again. So that's not a very healthy sign there for the US dollar. US dollar has been weak. Remember what I mentioned a moment ago when we were looking at the sector selector. In a weak dollar environment, you do find that energy, materials, and industrials can tend to do a little bit better than some of the other sectors that are out there. So if you expect this kind of behavior to continue, you'll want to focus on those particular sectors. But one of the risks is that when the selling gets so extreme, you start seeing these oversold cluster signals, it is possible that we get some sort of a quick little pop higher, but usually those pop higher do not lead to an actual trend reversal. They just lead to a momentary reprieve before a continuation of that trend. Eventually, there may be a trend reversal. It just doesn't happen all that often. One area where we have the legitimate chance of a trend reversal is gold. And remember, gold kind of works opposite to the US dollar. When the US dollar is weak, typically gold is strong, all else being equal. And you can see that gold was in a significant downtrend here back in March, started putting in all of these oversold cluster signals. Here we actually led to a legitimate trend reversal. So it can happen. It's just not the expectations for that when it does occur. But in this case, I think gold is being helped along, not only by a falling US dollar, but just simply because it's part of the whole inflationary and materials trade that is capturing the market's attention right now. And so, commodities starting to heat up in this environment where everybody's talking about inflation, and gold is benefiting from that. So strongly bullish posture above a rising 30-day moving average on gold, and we are just a stone's throw away from hitting a 3-month high on gold. Not to be outdone, oil also strong today. It was up 0.88%, and similar to gold, we are very, very close to a 3-month high here. Actually, in oil's case, it would be back here just about a week or so ago, because that high on an intraday basis was slightly higher than what we saw back here on March 11th. So obviously, pretty strong trend there when you're close to 3-month highs. Similar to gold, you see oil is above its rising 30-day moving average with a strongly bullish posture. We did see some slippage in long-term U.S. Treasuries. It's a little bit unfortunate there for the trade that I put on. I had a bull put spread on TLT, and it was looking pretty good just last week, but now with this kind of 3-day move lower here, we're back at a little bit more of a precarious position, and you might end up actually seeing some sort of a reversal pattern taking place here. So I'm going to keep my eye on that. If we end up having a losing trade there, it's not going to hurt my feelings too bad, because remember, nearly all of our recent trades have been winning trades, so I know that's not normal. And so we've got to remember that every so often we got to throw some sacrificial losers to the trading gods. If this happens to be one of them, so be it. But I will say that things are starting to look a little bit worse on TLT than what had been the case here. I like this behavior when we were trading above that rising moving average. Now that we're below that moving average, I'm not nearly as enthusiastic about that trade. So we'll see where it takes us. We're not in the money or anything like that yet, but it is starting to worsen, so perhaps need to keep a closer eye on that one there. Interest rates did rise today, so that was the reason bonds were down. Interest rates rose. The 10-year Treasury rose to finish at 1.62%. You'll notice that the 10-year Treasury now has a weekly bullish posture. It still has a declining moving average, so there is something to contend with there. There's a lot of unanswered questions with bonds and yields at this point. But certainly in the last 3 days, we've seen rising interest rates and falling bond prices, and we'll see where that takes us. In terms of some of the foreign markets up at the top, we have a real distinction between developed foreign stocks and emerging foreign stocks. Now remember, that's not a new story. This trend has been developing for the last several weeks and months. But it is kind of interesting to me how different these charts look. Usually you see just a little bit of separation where one's kind of outperforming the other, but it's not really a head-turning type of a situation. This one's a little weird because your foreign developed stocks are in a really healthy uptrend right here. You can see strongly bullish posture according to that background color in dark green. Intermediate line is at 87 there. Then you look at the emerging market stocks, and you're closer to 3-month lows on this chart than 3-month highs. And in this case, you're actually trading below the moving average, and you have a pink background color telling us that we have a weekly bearish posture in that case, where it's at 57 and falling. So, yeah, these charts will never look identical to one another, but they do tend to kind of go in the same direction. Right now is one of those strange times where that's not really the case. What accounts for that is anybody's guess, but remember, one of the things that the world is still grappling with right now is the coronavirus, and many of those areas like India and Brazil continue to be some of the hardest hit areas, and of course they are two of the key areas within the emerging markets as well. So it does make me wonder if the stock market is just a little bit more hesitant in some of those areas that are being challenged by the coronavirus pandemic a bit more. Let's take a look at some of the sector action today. I think materials were our leader, but let's just verify that here. Yeah, materials were the only sector that finished in the green today. Not by a lot, but they did close higher by 0.33%. And you can see how beautiful that chart looks. I mean, these things have just been rocket ships to the upside here. Really, yesterday was the only down day that we've had in the materials since this red candle back here last month. April 30th. So this has been one of the better times to be involved in some of those steel stocks and a lot of those other materials types of plays that are out there. So once again, leaders lead, and that is what we're seeing here with the materials closing in the green here today. As far as who the worst performers were, it was actually energy and financials. And that could very well be just because it's a little bit of profit taking in some of those areas. Notice that both of their background colors of their charts remain dark green, telling us that we still have a strongly bullish posture on them. It's just that maybe their trading behavior has been a little bit more erratic, and that's certainly been the case for energy. You kind of had this big up move followed by this big down move followed by this big up move, and now who knows, maybe we're starting that big down move again. We'll have to keep our eye on that. It is the potential right there with XLE to have a bit of a double top, so that's a little bit more unnerving in a situation like that. Whereas you look at materials and you can see just how consistently smooth that chart has been. You don't have that herky-jerky type of motion like you do there with energy. So those are a couple of the areas that struggled today, but until they close below their moving averages, I think you kind of want to remain patient with those areas. The more concerning chart, in my opinion, is right up here with technology. That's a breakdown of that chart right there. And you also have the same thing kind of going on over here with discretionary. Now remember, these ones are market cap weighted. So here you are going to find that Amazon and Tesla are going to be much more impactful, the chart of XLY. So keep your eye on those types of stories, as well as they've kind of fallen out of favor here a little bit more recently. All right, and speaking of the financials, so again, note that the financials are doing quite well in terms of their intermediate reading at 91. That's second only to XLB, the materials, at 93. So despite today being one of the poorer companies there in the financials, they still have one of the strongest trends on the board from a sector perspective. That's going to be important as we start talking about our trade application example now. So let me pull up chart 4A. And before I get to actual stock that I traded, let me just pull up XLF because I'm curious if that ended with a bullish intermediate confirmation signal, and indeed it did. So this is kind of like a triple threat type of a trade here, where we have bullish intermediate confirmation signals in 3 different charts that are all relevant to this trade setup. So first of all, note that on XLF here we have the green line in the upper reversal zone, we have the red line in the lower reversal zone, and we have the blue line positioned nicely between 50 and 20. The other thing that I would mention is what I mentioned previously, which is not only is the financial sector giving us that setup, but so is the Dow Jones Industrial Average. Green in the upper reversal zone, red in the lower reversal zone, and blue between 50 and 20. So if you were to look at all the financial sector stocks within the Dow Jones Industrial Average, one of the companies that you would come across is none other than Goldman Sachs. And as you can see here, Goldman Sachs is also producing that type of a setup where we've got the green line in the upper reversal zone, red line in the lower reversal zone, blue line between 50 and 20. And so I've already done the trade, as is always the case. Remember, one of the benefits those of you that are premium members receive from us is access to our Trade Alerts app, where you can be notified when David and I are placing our trades, not only for these Market Outlook presentations, but for all of our trading rooms that we teach. So that way, even if you're not in the live classes, you can still keep up with what we're trading. So the trade's already done. And what I chose to do was a bull put spread. I can't remember exactly what the execution price was and all that. So if you need the specific details, check that Telegram app. It's got all the trade details, including the screenshots and all that kind of stuff. But what I did do was a bull put spread, and I'm pretty sure I concentrated on the 340 strike as our sold strike and the 335 strike as our bought strike. And we probably got around a 30% return on risk, because that's usually what I'm shooting for when I'm doing those types of trades. Anyway, for those of you that are newer to the idea of selling a bull put spread, effectively what I'm doing with that is I'm being moderately bullish. I'm not being wildly bullish, because I'm still accounting for the possibility that with this market acting a bit shakier here recently, that maybe we've still got a bit more selling to go before this thing kind of stabilizes a little bit more. So by selling a bull put spread, where in this case I sold the $340 strike, what I want to occur is for this stock to stay above 340. So in other words, I don't need Goldman Sachs to break out to new highs. I just simply need it to stay above 340. And at this point, it's trading at close to 360. So in other words, think of it like I've got a $20 per share head start. And as long as I don't soak up that entire $20 per share, then I should win this trade. Now, the downside is I don't win a whole lot with the trade, right? You have a higher probability of success because you're kind of starting with, a head start, so to speak, by giving yourself that cushion to be wrong a little bit, where this stock could theoretically go down $15 per share and your bullish trade would still make you money. So what you gain in probabilities of success, you lose in reward possibilities. So this is not like one of those exciting stocks where you're going to triple your money or something like that. This is one where the setup seems adequate for the purposes of teaching the education of the bullish intermediate confirmation signal, like I've shown you here, and to give us that head start there, and to have our sold strike be below the rising 30-day moving average, which might end up providing some support for this stock down the line as well. Hopefully that will be helpful for us. So we'll see how that does. A bullish trade idea there on Goldman Sachs as a result of the bullish intermediate confirmation signal. All right, so that does it. A little bit longer video today, but a few more things to talk about today since it was such a crazy market environment that we found ourselves in, with a big gap down to start the day, but then a very, very nice rally as we ended the session. So we'll see where tomorrow takes us. Remember, we do have another inflation meeting of sorts coming out with some of the Fed speakers going to be talking about that. I think Bullard was talking about it today, but David will catch up on all of that if there's anything important that takes place tomorrow during the day when he does the video for you guys tomorrow night. So until next time, I want to wish you all the best of success with your trades and your investments. If you got value out of tonight's video, do me a favor and click like for me there on Twitter. Thank you so much. Have a great night. Bye-bye.